Are you a business owner and you need to choose a retirement plan either for you and your employees? We have all the answers for you coming up right now.
Solo 401k all the way over SEP IRA. Don't talk to me about a SEP IRA. No.
I didn't like that. You're too aggressive. Good morning, good afternoon, good evening. Welcome to another episode of Playbook of the Wealthy. As you heard by our teasers, we're mixing up our flow of the content. You now know what our episode's about. It's about small business retirement plans. We're going to make it fun. We're going to throw some stories in, and you are going to find out which is the best plan for your business. If this is your first time here, you don't have any frame of reference for our podcast, so this is great. If you've been here before, this podcast format's going to change because we've been told that we are a little bit slow. So, Heather, how are you?
I'm good. Oh, Dave, how are you?
I'm awesome. Let's dive into our content.
All right. There's some context here, and then we will dive in. One of our podcast clips went viral on YouTube. We got a lot of feedback. We're no longer doing the intro section. We're just going to dive in.
Let's dive in. So if you are a business owner, you're going to have a multitude of choices of retirement plans you can choose from. Some are better than others. Some fit different situations better than others. So you can have your own 401k plan, or you can have a plan called a SEP IRA. Heather's going to go into the details of these things. You can also have a defined benefit plan, which essentially is you build your own pension inside your company. Heather's going to take you through a couple of them right now.
When deciding what retirement plan you're going to pick for your business, there are a few things to start with. A, is it just you and your business, or do you have employees? What are your goals? And how much do you want to put away? That's where I would start. And think through this episode, know those answers, because that's going to quickly help you determine which one is the right fit for you. If you are a business owner and you do not have employees, now to be clear, contractors don't count. That's not considered an employee. It's someone you are paying a W-2 wage to. If you have no employees, the two options that are thrown on the table are SEP IRA and solo 401k. The solo 401k, in my opinion, is far superior.
Just so you know, a listener and viewer, in a previous clip, Heather got way more animated with that. She started slamming SEP IRA on the floor, treading on its face, pretty much just saying that it's the lesser alternative to the 401k.
I don't really see the point of having a SEP IRA. I actually do find that CPAs, though, today normally recommend the SEP IRA because they understand it more. The solo 401k does add complexity. Let me explain why I love the solo 401k. One, you can contribute way more than a SEP IRA. That means a bigger tax deduction. Number two, because it's a 401k and not an IRA, if you've listened to our previous episodes, that means it does not work against you on the backdoor Roth. It allows you to still do the backdoor Roth. And three, if you have a spouse, the spouse can also contribute on the employee side, right? A spouse can have a solo 401k. With the max that you can put in a 401k is $70,000 in 2025. Imagine if you're a high income person, you can put 70 and your spouse can put 70, assuming, of course, you have enough income. I'll go through that calculation. That's a lot of tax savings right there. $140,000. Are you kidding me?
So for the 401k, you can do the employee contribution and an employer contribution. SEP IRA, you're handcuffed for the employer contribution. You can't contribute as an employee.
And I will say CPAs get really tripped up on this calculation. SEP IRA is pretty simple. It's 25%, right, of profit or W-2 wage. For solo 401k, you get to do the employee 401k contribution, which this year is $23,500 plus 25%. Let's say you're a business owner and for ease, you're making $100,000. That's an easy number for people to think through, right? SEP IRA is what? I said it was 25%. So what is that, Dave? What is that?
$25,000.
Okay, you can do $25,000 into a SEP IRA. What do you think you can do in a solo 401k?
So you said it was 25% of the profit. So you got 25 grand right there for the employer. And then you've got the employee contribution of the 23.5.
Which makes it 48.5. $48,500 of a tax deduction. compared to $25,000 in a SEP IRA, that's a huge difference. That's almost double that you could put away in a solo 401k on $100,000 of income.
All right, correct me if I'm wrong here.
Yes.
With a SEP IRA, do you have to wait until the end of the year to figure out your company profit before you can do the contribution, or can you do it throughout the year?
It depends on if you're Schedule C or S Corp. Not to get into the details, right? But in S Corp, it's based on your W-2 wage. So depending on, you're paying yourself through the year, you can do it. But if you're a Schedule C, you kind of need to wait until you know that profit line on your Schedule C. And then you have to back out. There's a very complicated calculation that listeners, you will thank me later. I'm not going to take you through it, but it is complicated with self-employment taxes.
So if you have the solo 401k, you can put more in.
You can put more in. And it really matters whether you're an S Corp or a sole proprietor filing Schedule C, how it's calculated. Those are two key things. So this is really where a financial planner and a CPA need to have a good relationship.
What if I've got employees?
I mean,
we're on a game show now.
I can talk about myself. This year I hired Lisa, my employee. I previously have had a solo 401k. I could not contribute to my solo 401k anymore this year, this whole calendar year. And because of the financial planner I am, do you think I offered a 401k plan to my employees?
Of course you did.
Of course I did.
So you were able to transfer your solo 401k into a regular 401k plan?
Yes.
As you hired? Okay.
Yes.
Because I'm sure that's going to help people if they're trying to grow, figuring out, okay, if I have a solo 401k or even a SEP IRA and I need to open a 401k plan, am I stuck now just having this 401k plan floating out there? But no, you can roll them in.
And if you are a business owner, I chose Guideline. I think they're great. Their portal's great. And it doesn't cost anymore for a business owner to have a full-blown 401k plan, like 10 grand. It doesn't cost that anymore. Mm-hmm. I think I pay like $100 a month. Pretty much all my business owners without employees have solo 401ks.
All right, people. If you have heard of those, you may have also heard about a simple IRA. That is another plan that company owners with employees use. I had a client use one of these. She ran her vet practice. She was the owner and main vet. She had employees underneath her. At the time, she didn't want to make it a big, complex plan like they were in the past. She just wanted something that was simple and easy to run. And it didn't have all these documents that kind of came with it and all this reporting that you may have to do with a 401k plan. So that's why she did the simple IRA. It ended up being very easy to run. Like I managed her account. All the employees had their own account somewhere else, and it just runs with payroll. It's very easy. The downside is the funding limits are less than a 401k.
They're much lower. Yeah.
So you have to be aware of your employees may kick up a fuss, the fact that they can't put as much in their simple IRA account as they would their 401k. It's a dying plan. I've seen one of these in my lifetime career. There's not many of them around.
And to be clear, because it's confusing, of course, in our financial world, simple IRA is different than the SEP IRA. They sound similar.
Which is even different than the traditional IRA, which is not an employer plan at all.
Yeah.
Let's make it hard on people.
Yeah.
All right. I did work with someone who made a boatload of money. They were they were a real estate attorney, pulling in just under 7 figures a year that they could pay themselves in income. They pretty much had no office staff. They worked seemingly around the clock. And they were like, okay, so if we did a 401k plan, we could put $70,000 away if we're using this year's numbers. And now we have all this excess money that we really would like to save. I came along with the S on my cape, on my back, as I always do, and told them about the personal defined benefit plan, which essentially is your own personal pension plan. So what that is if you are very high income and you want to shield a lot of money away, you can build your own pension plan. You do have to get an actuary involved because you have to figure out, okay, based on my age, based on my income, based on my goal at the end, how much am I going to save for the next X amount of years that you're then locked into? So it's a rigid plan. And you can do it with staff. But when you add staff into that mix, now you have to take into consideration their income, their age, and how that goes into funding everyone's pension plan. Because now you have to fund a pension for them too, as well as yourself.
And Dave, please give the example of this that you heard. You needed my permission because it sounds bad, but it's whoever said this to you. It is a great way for people to think through where this fits. So just give it. It's not Dave talking, to be clear, everyone.
Yes. This is a story I heard because it is very sexist. This is not something I made up or saw. But the next time you go into your doctor's office, if you have an old male doctor and all of his staff are young women who typically may not get paid much, he may have a really good pension plan that he's running because his staff are young, they're not getting paid much, whereas he's old, he's getting paid a lot. That works really well into designing a good pension plan.
My understanding is because it's so rigid, it makes people nervous because you have to hit these amounts. You got to you want to be able to have consistent income, is my understanding.
True. Yeah. If you're very much a commission-based business that is with the flow of various trends, I would not recommend selling this up. But if you are someone who has consistent high income year after year and you've got a track record, this is something that would definitely work.
I'm thinking this is great for someone in their 50s. They're going to retire in 5 years. They're making near 7 figures, but they're behind in retirement and they need a huge tax deduction and they want to put as much away. That's literally what is in my head. That's a great fit for that.
And when you're saying it's a pension plan, you can turn it into a stream of income, but you can also flip everything you've saved and move it to an IRA and then figure out where to go from there. So it does have some flexibility on the back end, just not in the design and the funding.
It's not an easy answer, is it? There's complexity everywhere with which retirement plan is right for you as a business owner. I will put it in the pretty bow for you. So if you don't have employees, your option is solo 401k or SEP IRA. Go with the solo 401k. Make sure you have a good CPA that understands it. If you still want to put away more, you don't really have a lot of employees or they're young and you're making a buttload of income, consider a defined benefit plan. And if you do have employees, you probably need to do a full-on 401k plan, or you could look into the simple IRA.
Heather's bow.
Was that a good bow?
Yeah. We'll give you sound effects. I'll find you one. Here it is. Did you like it?
Yes.
All right. That is the end of Let's Dive In. We're going into our next section of the podcast. It's called What Would You Do? What would you do is all questions about our content, just in case you didn't understand our content in Let's Dive In. We're going to give it to you in some question form. Question number 1 for Ms. Townsend. I've been using a solo 401k for my business, but I'm hiring a staff member. Should I keep using a 401k plan, or is there a better option?
You can't use a solo 401k anymore if you're hiring, once you have an employee. I mean, depending on the plan documents, but I'm going to assume you can no longer have a solo 401k. So you should convert to a 401k plan.
You heard it here first.
But do you know what's interesting? In many states, Dave, they're starting to have 401k mandates for business owners. California, there's a lot of states. If you have employees, specifically more than 5 employees, I've noticed. All right, my wife and I work on a side hustle together and make about $150 each year. We want to aggressively save for retirement with this money and prevent paying taxes on it. What approach should we take?
This has got a lot to it. When you're saying there's a side hustle, I am assuming that you have jobs originally and you're working on something after work, which is making you all this money. You cannot have multiple retirement plans, if we're talking about 401k plans, and max fund them all. Like, that doesn't work. You have a limit each year by the IRS, and that's $70,000 this year. So if you're saving to your work 401k plan and you max that out on your employee contributions, you can't then go to a solo 401k plan and then save the employee contribution over there as well. You maxed out at work. However, you do have the option of setting up a solo 401k plan and doing the employer contribution on your side hustle. You just can't put any of the employee contributions in there. Now, if it's you and your wife, let's assume that your wife doesn't have a 401k plan available to her at her job. She can do the employee contribution if you're to do a solo 401k plan. and she can have the employer contribution on that side as well. So you do have to figure this out as to where you're contributing elsewhere. But the solo 401k plan is going to be the best place for you to shield as much money as you can. You're making 150. If that climbs a lot, you could then figure out, okay, do we start looking at a defined pension plan, so a defined benefit plan for your business too? But you're not there yet.
And as you're talking, I'm thinking, oh my gosh, you also have to track the employer match at your corporate job to go towards that 70K. This is a fun one.
Yeah, you'd probably want to do that solo 401k contribution at the end of the year. So you actually figure out how much room do we have left.
Totally agree.
But it's not like you can just shield money from the IRS with no limit. You have a personal limit each year, regardless of how many retirement plans you have.
I just joined a doctor's practice. We'll earn about $800,000 per year. And they have been saying that I have a 401k and pension plan. I'm confused whether I should use one or both. What do you think?
All righty. Well, you can have both, even though we've been talking about using one or the other. But when you are designing a defined benefit plan as a company, you can either just design a straight benefit plan, or you can have a 401k in tandem with a defined benefit / pension plan. So you can use both. If you're earning $800,000 a year, and there's lots of details we don't have here, but I'm assuming you want to shield a lot of money away from taxes. If you put $23,500 into the 401k plan, you've got a lot left over for that pension plan. Pension plans don't actually have contribution limits annually per person. It's all based on what you want the outcome to be. So you could be shielding hundreds of thousands of dollars per year into a pension plan based on, again, we talked about it before, your age, your income, the makeup of the company that's in the benefit plan. So to sum it up, you can use both, and you probably should use both if you have an income this high and you're trying to shield a lot of weight in taxes. Those are our questions. We're going into the next section. It's called Highlights. This is where you get to learn about the personal side of us, whether you want to or not, and we'll tell you the fun stuff about our life. You have one word as your highlight, and I'm intrigued.
We just got back last week from Minnesota, and it's become a tradition in our family. My cousin lives there, and I take my girls, and my cousin's kids are, I don't know, a few years older than mine. My daughter is obsessed with her brother. I call him brother. I mean, she looks at him with like googly eyes. And it's just really neat. I didn't grow up with cousins and a big family or anything like that. So it's just really magical for me to see my kids play with cousins. They're actually like second or third cousins or something like that. And my cousins' parents act like their grandparents. And it's just really sweet. And we went up to the North Minnesota where all the lakes are. And my girls at 4.5 went tubing.
Nice.
I know. And now I'm like, if anyone's been following on the personal highlights, I'm like, do I actually want a lake cabin or do I want a place in Park City? I'm all over the place.
Why stop at 2?
I know, but the whole idea, there is really nothing better than being on a boat in the summer, on a nice, perfect, hot day, beautiful lake day, listening to music, tubing. I think that's one of my favorite things to do. It was amazing.
I agree. We do a similar thing. We go up to Sarah's parents' lake house probably for like 4 days when we have a break in sports, and we're tubing, fishing, swimming on the lake. It's great. All right. We had an interesting version in our town that made national news.
I want to hear.
Yes. So, I live in a small town that's kind of surrounded by bigger towns. We had a microstorm come through. What is it? 4 days ago. It was literally like a tornado came through our town. It ripped trees out the ground on like our main street and threw it onto houses. There was golf ball size hail like coming horizontally at your house. That was one of the times where I love watching storms. When you watch a storm and you gradually start to get a little anxious and you're like, this is a little bigger than I thought. And so I'm yelling at the kids like in the basement, because if some of that hail comes through the window, we're getting taken out. Coming through the window, 3-week-old windows that I'm now pissed about because the windows were installed and then a huge storm came and hit the house. Highlight being we have hail damage on our siding, our roof, our garage door. So we may get a whole new house on the outside based on our insurance. We'll see.
Oh my goodness. And you'll have to share, especially with what's going on with insurance. I'm really curious. What does this do to your insurance premiums if you end up taking a claim? Please share.
Well, they've been going up astronomically already.
Yeah, I know. So now what's going to happen with you having a claim? I mean, on that kind of cost, this is what we have insurance for. So it's not one of those where it's like, okay, it's a few grand, just pay it to save on the. This is probably one of those where you need to use your insurance. But I am curious how much you're going to have to share how much your insurance goes up after this. Because you're not going to be the only house either in your area that probably claims on their insurance.
They're doing it the whole street. The whole town is going to have a claim, essentially, for hail damage.
I'm sorry about that. How bad does your house look?
It's livable. Some people's houses are not livable. Like they have trees lying through them.
Well, I'm glad you're okay. And I'm glad you have home insurance. That is why we have insurance.
Agreed.
Everyone hates on insurance. I don't.
All right. If you've been listening for Jordan, he is coming right at the end of the podcast, and he will be at the end forever and ever more. But thank you for listening to this episode of Playbook of the Wealthy. You can find us on whichever platform you listen to podcasts. And if you want to look at the video version of the show, because why wouldn't you? We're beautiful. You can watch on YouTube, Instagram, and LinkedIn. If you want to send us an email, it's on the screen. It's hello@playbookotw.com, and we'll see you next time.
I love questions. Please send them and feedback. Toodles!
All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only, should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast.